Well, the stock in focus today clearly is Zee Entertainment, easily the top Nifty gainer, up 9%, rallying post a stellar set of Q2 numbers. Brokerages have also given a thumbs up to Zee Entertainment numbers. Of course, joining us now is Vikash Mantri, media analyst at ICICI Securities. Mangalam will also join us in a bit. Vikash, good afternoon. This ad revenue growth of 35%, that really surprised everyone. Where's this number coming from, and do you think this is sustainable, and can it drive further re-rating for Zee?
Okay, so there are two components of this ad growth that has come in. One is because of the new channel, which is Ant TV, and which is not there in the base. So close to around 9% is contributed to that. So a like-to-like growth is around 26%. Now, what we gather from industry is that the broadcasting TV space advertising driven by FMCG and e-commerce is growing at close to 20%, and Zee, with the backup of market share gains across regional properties, has done better than that. So a 26% growth on a like-to-like is sustainable provided industry grows at this pace and market share remains at the place they are.
Okay, so what's your own channel check telling you? This let's assume this to be 26% like as you said. Is this sustainable at this point in time? Do you have visibility of that for the next 4 or 5 quarters?
I think in case of Zee, we clearly have that visibility because they have gained market share across the regional properties. Now, unless market shares swing materially here and there, I think this kind of a 25% growth for Zee is sustainable.
Okay. So, Vikash, what would your own target price be on the stock now? And if you have, with a 6 to 12 month horizon, what should an investor look at?
See, we've recently upgraded the stock yesterday itself post the quarterly result, and our target price stands at 422, which is 30 times FI 17, and it's an ad rating per se. Clearly, we believe that the stock is going to outperform the market because clearly it is very difficult to find such kind of a growth, especially in an environment where most of the companies are disappointing on growth. So clearly we see outperformance to happen. Absolute returns might be difficult given the already high valuations.
Okay, but your 422 target has already been met today itself. It's at 420 rupees. So if someone is not present in the stock, you think that the risk reward is now not favorable?
Yes, so I would recommend him to wait for a dip to be entering into the space very clearly. But clearly it's a good company and we would recommend people to be investing it definitely at lower levels, though today might just be too much of action.
All right, Vikash, we'll leave it at that. Thanks so much for joining us. That's the word coming in on Zee Entertainment. They've recently upgraded the stock.